Welcome back, investors, to Ticker Time News. I'm Adam, and Rivian is enjoying a much-needed rally after reporting Q1 results that looked rather grim on the surface. For instance, adjusted EBITDA worsened considerably to a loss of $1.14 billion from a loss of $396 million in the same quarter a year ago. Likewise, cash flow from operations spiraled lower to a loss of over $1 billion from a loss of $362 million as Rivian ramps up production amid ongoing chip shortages and supply chain constraints. However, with shares already down nearly 80% year to date, Rivian was primed for a rebound as investors latched onto any positive sounding updates. Indeed, the company's earnings report, outlook, and commentary from its CEO did provide some encouragement that better days are on the horizon. Production of Rivian's R1T pickup truck and R1S SUV is still significantly constrained, but progress is being made. In Q1, the company produced 2,553 vehicles, more than doubling its production from last September through early March. If not for assembly line stoppages resulting from supply chain disruptions, Rivian's production would have been much stronger. In fact, the company stated that it lost about a quarter of its planned production in Q1. Now, the 20% price increase that Rivian announced back in March has not caused demand to cool off much. After R1 pre-orders climbed to 83,000 from 71,000 in Q4, pre-orders increased again, reaching 90,000 as of May 9th. How long it takes Rivian to meet that demand, though, is the key question. To investors' relief, the company reaffirmed its annual production guidance of 25,000 EVs, adding commentary that the worst of the semiconductor shortages appears to have passed. Hopefully, that is the case. But it's worth pointing out that other automakers such as Ford and General Motors previously projected that the chip shortage would ease in early 22. While the company is burning through a boatload of cash, it's actually ahead of schedule, with nearly $17 billion in cash on the balance sheet. This puts Rivian in good position to launch its next vehicle, a more affordable EV called the R2, without tapping into the capital markets again. As of now, production is slated to begin at its new Georgia facility in 2024. Although investors would be wise to take those plans with a grain of salt, investors following Tesla can attest to the fact that goalposts for EV launches frequently move, especially in the current environment. Looking solely at Rivian's Q1 performance, the stock's recent gains may look a bit shocking. However, through the lens of future improvements, the move begins to make a little more sense, as investors foresee a material step up in production later this year. Any concern that demand would slow due to price increases was also alleviated, as consumers' enthusiasm for EVs continues to build. Overall, Rivian's report provided good reasons to feel optimistic about its prospects again, but the risks remain very high for the stock to remain volatile in our current environment. What did you think about Rivian's earnings, and did you find anything to be optimistic about? Let me know in the comments below, as your comments help us all to better understand. Help us out by smashing that like button, sharing this video, and clicking the first link in the description to join us in beating this crazy market. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.